Hi there, welcome to Kneppy Invest and welcome to June 14, 2024, the most important, the most significant day on the calendar, not the investing calendar, the world calendar, June 14, 2024. It's not the most significant day because it represents only 200 more days left in the calendar. It's not the most important day because it is Flag Day in the United States. It's not the most important significant day because this is the day Donald Trump was born, or Boy George, Steffi Graf, or Lucy Hale. In fact, the only reason I've watched anything Lucy Hale has been in is because not only is she quite attractive, but she was born on this day. Yes, I was born on this day, June 14, many years ago. So I am now 23 years old, hint, hint, or wink, wink, I should say. And I've had a busy day because I took the dogs out for a long walk this morning, so 2-hour walk. I'll actually take them out for a longer walk tomorrow morning because it's Saturday, and I might take them to Mount Coot. I haven't taken them there for about 2 or 3 weeks, and they love long walks. I love long walks in the morning. But my parents are visiting, and we were going to go out to South Bank in Brisbane this evening to go to a restaurant. And then I realized we might have to wait 30 minutes to an hour for seats because they take a limited amount of bookings. And to be honest with you, in fact, I don't really like restaurants all that much, and to wait for restaurants, I could not think of anything worse. So we decided to go for lunch at 1:30 p.m. I thought it'd be quite empty. It wasn't that empty. And then one of the reasons I also wanted to go to this particular restaurant is because just down the road, there's a Messina Gelato, or Gelato Messina, and I had some of their delectable, delightful gelato a few months ago when some members of their store came into our office, actually our building on the ground floor, and they're handing out free small tubs of their gelato. And this is the first time I've tasted it, and it was absolutely stunning. So I went to this particular Messina Gelato to try some of their absolutely wonderful flavors after lunch. We arrived back home about an hour ago, and I thought, instead of going straight into the video, I'll just relax for a little bit. And I have started recording this video at 4:17 p.m. So just after the markets have closed. Now, I was busy just after I took the dogs out for the walk and arrived home because I was a little bit active in the markets this morning. I might talk about that when I do or record the technical update video that I will release on Sunday, the 16th of June. I record that tomorrow on Saturday, 15th of June, because I am busy, completely busy on the 16th of June. Won't have any time to record anything. So look out for that video. If I don't forget, I will tell you why I was busy this morning for about 1 hour. So the agenda for today's video is we'll have a look at the ASX today. I might have a look at one tweet, and I'm going to answer a couple of questions that were left on yesterday's ASX Daily Rundown video, because these questions were pertinent to something I was talking about in that video. And I thought it's probably best to answer those questions in this video. And then we will look at the top 5 announcements of the day. Now, to be honest with you, nothing much was released today. However, I did come out with 5 announcements that were good enough to be in the top 5 announcements. Maybe not some other days, but definitely this day. And then we'll have a look at charts. In fact, I have 8 potential charts I want to look at the end of the video. I should have started timing this. So time is, what was it, 4:13 or something like that. Okay, so let's get stuck into it. Before we have a look at the ASX today, and it looks like it was a pretty negative day. Let's have a look at a tweet. Oh, I love this tweet. This is an absolutely wonderful tweet. I'm not sure if videos work on this, but this is the best magic trick ever. I don't think you really need sound for this. Hope the video goes well. Yeah, so let's replay that again. It's just a really cute magic trick. Yeah, and the boy disappears. The sister wants to make her brother disappear, and eventually she has to kick him in the backside because he's not actually doing what he's supposed to do. What a wonderful, wonderful tweet. Other tweets. What's this one? Imagine still waiting for that gap fill as Nvidia hits new high after new high. This gap was almost a year ago. In fact, probably over a year ago at about $40 because they've done the share split or whatever. Now it's $130. So share price has tripled since then. And I opened up this particular tweet and I just wanted to see the comments because I knew someone eventually was going to say, this gap will fill eventually. It has to fill because there are a lot of traders out there who believe all gaps fill. It's absolutely ridiculous notion to believe that all gaps must eventually fill. I have seen gap after gap after gap not fill during my time investing over the last 15 years, but there's still this belief that all gaps must fill. Now, I would say this is a runaway gap, and I'd say very few runaway gaps fill. Now, some people still believe gaps fill, and they might be waiting 5 years for the gap to fill, and then it fills, and they go, see, I told you, it fills. But anyway, so don't always listen to those people who say this gap must fill. They don't always fill. And there was another one down here somewhere. Oh, this Kobayashi letter. We've doubled our first homer grant to 30,000. Stephen Miles, who is the Premier of Queensland, owns, I think it's 3 or 4 investment properties. As soon as they lift the first homer grants, what do you think is going to happen to property prices? They rise by $30,000. This first homer grant only benefits one people, those people who already own a property. Doesn't benefit first homeowners because they have to pay a same amount of money for their property. When I say same amount of money, that's with the grant. And this is the reason why government policy will never take positions where they will decrease property prices, because so many politicians have numerous investment properties. And do you think they're going to do anything to harm their investments? Absolutely not. Anyway, another one here is Kobayashi letter. 56% of Americans believe we are in a recession, according to a Harris poll. Meanwhile, GDP grown for 7 straight quarters. Also, 49% of Americans believe the S&P 500 is down for the year. Meanwhile, the S&P 500 is an all-time high. The disconnect here is massive. Also saw somewhere where Powell said he doesn't understand why people think the economy is weak because it's really strong. So there is a massive disconnect, a huge disconnect between what's happening in the economy and what the numbers suggest. A massive disconnect. Now, if you ask me, I would say everything's going wonderfully well, but I'm not in debt. And I think if you ask people in debt, people who have a mortgage, they are struggling. People who don't have a mortgage, people who are retired, they are living the life. Anyway, I'm not retired, but I'm living the life. Anyway, so that's the bookmarks, not the bookmarks, Twitter or X, whatever you want to call it. Now, I'm going to go to a couple of comments were left in yesterday's video. So how do I plus? There we go. So Effigy and Thomas Carafa. So Effigy says, didn't quite understand the Sigma info. Would you personally invest now or soon? Please keep us in the loop. And Thomas says, am I saying that if Sigma and Chemist Warehouse merger doesn't go ahead, share price will drop? So I should wait and see what happens before investing. Now, of course, I can't give you any personal advice. I can give general advice, but not personal advice. I can't tell you what you should do. Now, if the Sigma and Chemist Warehouse merger doesn't go ahead, yes, Sigma's share price will fall, because the whole reason it rose was because it was going to become a Chemist Warehouse business virtually, because this is not really a merger of equals. Chemist Warehouse is a much better business than Sigma Healthcare. So the reason why the share price rallied significantly, let's have a look at the chart for Sigma. The whole reason the share price rallied was because people believe this was going to become a Chemist Warehouse business. So before the announcement, the share price of Sigma Healthcare was down to about 65 cents. And there is potential, if this merger does not go ahead, the share price would fall, maybe not to that level, because there might be hope that the merger eventually will get ahead, but the share price will drop significantly. We see this all the time when proposed mergers sort of nixed. They sort of won't go ahead. We see the share price pop up on the announcement of the merger or the takeover, and then the share price falls when that takeover bid gets withdrawn. We see this all the time. It's one of the reasons why when I am holding a company and there is a takeover bid for a company I own, a lot of the times I will sell out. And then if the takeover bid is withdrawn, the share price drops and I buy back in at a lower price than what I sold. That has worked for me on numerous occasions in the past. Doesn't always work. And sometimes I miss out on a bidding war, but bidding wars happen less frequently. I should do some research on this, but based off anecdotal evidence that I have, bidding wars happen much less frequently than takeover bids being withdrawn. Now, the whole reason why the share price dropped on this ACCC news is because they're a little bit wary. They're not sure whether this will decrease competition or not. And that's why the share price did drop yesterday. Okay, so let's go back to the question. So yes, share price will definitely drop if the merger doesn't go ahead. And that's the reason why the share price dropped yesterday, because there was a little bit increase of the risk. So there is an increased risk. So right now, I think whether you take a position in this Sigma Healthcare right now is dependent on your risk profile. Are you more a risk-taking investor? Because you know, if this merger goes ahead, there is a chance the share price will be significantly higher than it is now, because Chemist Warehouse would be fairly close to being a quality company. Sigma Healthcare is not a quality company. It's nowhere near a quality company, but Chemist Warehouse, I think, could be considered a quality company based off what I have looked at. So if this merger does go ahead, the share price probably would be higher. But on the flip side, if something happens and this merger doesn't go ahead, the share price will drop. So it all depends on your risk profile and what opinion you have on Chemist Warehouse. So I can't give you personal advice. Personally, I am on the sidelines right now because I have no idea. I would probably say, and this is based off no evidence whatsoever, just an opinion. I'd say more than likely the merger will go ahead. Now, I can't give you a percentage. It could be 51%, might go ahead, maybe 55, but I think probably will go ahead. But there is that risk that it will not go ahead because of some of the concerns raised by the ACCC. So hopefully I've answered some of your questions there. Okay, so let's have a look at the ASX today. And yeah, we've had a bad down day today. Is this over? Yes. So it says, oh no, it's updated now. So ASX 200 down 0.33%. I just want to make sure that is updated. It's not delayed. I have a feeling it's not delayed. 0.33%. Yeah. So I don't think market indices are delayed. It's just the individual company stock prices are delayed. So let's have a look at the best performing indices, sectors, companies, and also the worst performing of those three. Sectors, discretionary, healthcare, up. Not sure why. Real estate flat, staples flat, utilities flat as well. Worst performing sectors, telecommunication, IT, industrials, energies and materials, all down by over 0.59%. Indices, all the indices are down. So let's have a look at all the ASX indices. So there should be a few up here. So discretionary, healthcare, ASX 200 REITs also up slightly, and the worst performing indices, gold down, all tech down, communication service. I'm not sure why tech is down because Nasdaq was up. I'm pretty sure Nasdaq was up, and Adobe released their results. I'm pretty sure after training had finished for the day, and I'm giving away one of the top 5 announcements of the day, and it was a pretty good announcement. Pretty good results, and the share price more than likely will pop up about 15% higher on open tonight for Adobe. And I am happy with that because I am Adobe shareholder. All right, so yeah, so let's have a look at the ASX 20. Just see, so discretionary healthcare and telecommunications IT. So I'm assuming the best performing companies in the ASX 20 probably would be, I am going to say Wesfarmers, Woolworths, maybe CSL, and maybe Goodman Group. And the worst performing companies, Telstra, WiseTech, and REA Group. Let's have a look. And I'm going to say 7 up, 13 down. 7 up, close. 8 up, 12 down. The best performing, we have Goodman Group, Woolworths, CSL, and Aristocrat. I was thinking of Aristocrat, but I went with, what did I go with? I think I went with Wesfarmers. REA Group is actually up for today. So the worst performing companies today were WiseTech, and that's just because it's tech. Woodside, Fortescue, Telstra Group, that's it is, and Macquarie Group. So you can sort of see just by which sectors have performed well, which companies in the ASX 20 have performed well or not. So yeah, so I am a shareholder of WiseTech, so not happy with that, but I'm happy with the overall performance of WiseTech over the last few years since I've held it. You can't not be. Okay, so let's have a look at the best performing and worst performing companies today. Not much to talk about here, I have a feeling. Okay, best performing company is a company called Resuro Strategic Metals. I noticed here it says It's in the ETF sector. That's wrong. Why is that wrong? And I discovered this a few months ago because I saw there was a company, a real company, and it had an ETF sector, and I was like, that's wrong. And then I opened up, and it was a newly listed company. So I have a feeling Risoro Strategic Metals is a recent IPO. Maybe they IPO today. So let's have a look. We can easily tell. And there it is. Risoro to commence trading on the ASX today. Let's have a look at their investor presentation. I love this. When a IPO has an investor presentation the first day they list. A lot of times I will just have a look at the prospectus, but they have 4 parts to their prospectus, totaling 400 pages. I am not going to read 400 pages of the prospectus, so I do like an investor presentation. So they're a mining company, high-grade rare earths and titanium in Brazil. There you go. And as you'll find out on Sunday, I am going to pay even less attention to mining moving forward. And there are reasons behind that, not because of a comment that was left on my channel recently. It is something I've come to a realization that you just can't trust mining. That's come to that realization over the past few weeks. You just can't trust mining and individual mining companies. Anyway, so Risoro, Irene rare earths, and what's the other one? Titanium. And yeah, I will probably not look at this company for many, many years, if ever at all. Other companies on the best performing companies by percentage change, nothing really on here. Pac Gold, someone resigned there a few days ago. The share price fell a lot. Now it's recovered. Clio Diagnostics hasn't had another good day. Might have a look, if I do have time, at that chart. Rocket Boots, I mentioned Rocket Boots a few weeks ago, but nothing of significance here, although Summit Metals has been performing quite well. The chart looks pretty good if it is the same company. Let's have a look. Summit Metals. Minerals. Yeah, the chart looks pretty good. That's a really good chart. But again, this is a mining company, and I'm going to spend less time looking at mining companies' chart. You just can't trust them. That's what the realization I've come to. So let's have a look by market cap. And, ooh, interesting. Life 360's had a good day. Zip has had a good day. Tabcorp, Vista Group, Botanics. I am actually going to show you a Botanics chart. Demerix up again. I'm going to show you Demerix chart. And Retail Food Group, Wagners. I'm going to show you a Wagners chart. I can't believe 3 of the companies, in fact, 4 of the companies on this list, I'm going to show you the chart. So Life 360, not Zip. No, Zip's on there too. So Life 360, Zip, Botanics, Demerix, and Wagners. I'm going to show you the chart for all these companies for numerous reasons. So that's really interesting. Integrated Research is there as well. I'm not going to show you the chart for that company, but I'm just excited that share price of that company is up. It fell a lot the other day for no reason. Not sure why people were selling out of that company. So let's have a look at the top losers today by percentage change. I'm pretty sure Opthea, OPT, did a couple raising. That's why the share price is down on pretty big turnover. That's another reason I don't like mining companies. They are just so apt to do capital raisings on a whim any time. I really hate that. That's just me. And there's nothing else here nothing else there. Let's have a look by market cap. So Deterra Royalties did make it into my top 5 announcements of the day because they did an acquisition. So we'll talk about the acquisition. Southern Cross Gold, that is in my charts of the day. Centurus Metals, no, it's not. I thought that might have been it too as well, but it's not. I'm pretty sure that's nickel. And I have a feeling nickel has been in the doldrums recently. So let's have a look at the nickel chart. There is down again. So let's have a look at the line chart for nickel. It just seems like it's been collapsing. Yeah, it's just been collapsing. So it's gone from 1,780 to 1,500. So it's just collapsed in the last few weeks. And you can just see and compare that to Centurus CTM. Oops, that's the wrong one. Oops. Let's go to CTM. So CTM's or Centurus Metals chart looks fairly similar. Not exactly similar, but it looks fairly similar to nickel. And that's another reason why I've come to the realization I don't really like trading mining companies is because why not just trade the underlying commodity? It's easier. I think it's easier. Anyway, so we don't have to speak about Rentoro, what that company is. And anything else here? BetMakers. No, I thought BetMakers might. It's 8.6 cents. The share price of this company has fallen a fair bit. So I was looking at this company not that long ago, and the share price was like 10, 11 cents. Yeah, so BetMakers looked like it was trying to break out, and share price has gone straight down from almost 15 cents. It's almost halved in the last month. So that's BetMakers. And if they release a really good quality result, this could be an interesting play. And anything else here? No. Nothing else there. Okay, so let's go to the top announcements of the day. Yesterday, I mentioned a company called LBT Innovations. Now, this is not the top 5 announcements of the day. Honorable mention, down 10%. So yesterday, there's a really weird trading halt. So at 9:58 a.m., the company went into a pause in trading. Now, when a company goes into a pause in trading, typically it's just before trading has begun, or it's during trading. They go into a pause in trading, and then eventually you'll see a trading halt. But in this case, you did not see a trading halt. LBT Innovations went to a pause in trading, so we're expecting a trading halt, and then about 3 hours later, there was a lift of pause in trading, and the share price ran like a rocket. In fact, the share price rose 60%, 53.8% on the back of the lift in the pause in trading. And today, they had to reply to a query from the ASX why the share price rise 50% after you came out of this pause in trading. And their reply was actually quite interesting. And we get a sort of an indication, not an indication, they tell us flat out what happened. Okay, so in these price queries, typically the first question from the ASX is, have you not released any information that could be price sensitive? Typically, the company will say no. We don't have any information that could lead to a rise or a drop in the share price. So they answer no. If they answer yes, they have to answer question 2, but in this case, they answer no. So they skip question 2, go straight to question 3. Question 3 is typically, well, do you have any other explanation that could explain why the share price did what it did for you to get this price and volume query? Was this? Yeah, this is a price and volume query. So this is when, question 3 is where you might get some really interesting bits of information, because a lot of times companies will put some information in here trying to explain why the share price is doing what it does. And in fact, LBT Innovations did answer that, and it's just really interesting. So here's what they said. So the company lodged an announcement with the ASX on the morning of 13th of June, which is the reason why they went to a pause in trading, which after further consultation with the ASX, the company formed the view that it was not market sensitive and withdrew the announcement. So this is how I think it works. Now, I have spent a lot of time trying to research this. So a company has an announcement, and they actually do recommend whether the announcement is a price sensitive or not price sensitive announcement. But the ultimate decision comes from the ASX. And the ASX will either approve or say, no, it's not price sensitive. So it seems like on this occasion, the company thought it was price sensitive, and the ASX said, no, we don't think it is price sensitive. So then the company withdrew the announcement, which I didn't know would happen. So why not just release the announcement and mark it not market sensitive? Now, the company believes that resulting pause in trading and lift of the pause in trading announcements may have resulted in speculation causing the recent increase in trading in its securities. The company does not consider the volume of securities being traded to be material. Let's have a look at volume, because volume is very important. And to be honest with you, the volume was I'm going to say a swear word, 5.5 million shares. I suppose, yeah, the volume was significant, because the last time that we saw volume that high was back in April. I suppose it's not massive volume. Oh, when you look at we had 284 million shares traded on the 13th of March. So, but yeah, compared to there, no. Okay, so I don't think it was massive volume. It was just the rise in share price was interesting. And yeah, so I don't know what happened, why people were speculating. There could have been rumors on hot copper, that sort of thing. I haven't had a look at hot copper. I actually rarely go to hot copper, but Yeah, I have no idea. And this is not the sort of company I would trade at this point in time, because you can just see what happens on just rumors or speculation. Share price can rally. And when the share price can rally 53%, the share price can drop 53% in a fairly quick time as well. So that's honorable mention, LBT Innovations, just following up from what happened yesterday. I thought that was interesting enough to mention again. So let's get to the top 5 announcements of the day. And number 5, we have an American company called Adobe. We've already mentioned this. They released their results. Here it is. So they released their results and also their financial targets, what they call it. So the third year targets and also fiscal 2024 targets. Now, the most important thing when a company releases their results is whether their results beat expectations or missed expectations, but it's also off their targets. A company can beat expectations, and you might wonder why the share price is down significantly. I've seen this a few times now with American companies. The company beat expectations or even missed expectations, and the share price does the complete opposite. It's all about their future guidance, whether those guidance meet the market expectations. So in this case, the company beat the guidance, the results beat the guidance, and also the expectations for the third quarter and for the financial year beat market expectations. And that's why the share price more than likely will be up 15%. And there is a reason behind that. Now, the way I get a lot of this information is through Earnings Whisper. And they give me an email every single day, and here's their news on Adobe. Adobe beat expectations, and they go through it, go through all the information, all the numbers. Sometimes they'll even tell you what the company does. Adobe is changing the world through personalized digital experiences. For instance, here's ones from Wiley. I've never heard of Wiley. Wiley is a global leader in research and education, unlocking human potential by enabling discovery, powering education, and shaping workforces. That's another reason I love this particular email that I get every single day, because it gives me more of an insight into companies I've never heard of, like Iteris, global leader in smart mobility infrastructure management. And sometimes I look at what the company does, see they beat guidance, and go, oh, this company probably deserves more research. All right. Now, Adobe is a high-quality company. So this is the company's financial data, yearly data going back to 2014. Revenue has grown from $4 billion to $19.9 billion, so we'll say $20 billion. So revenue has has increased fivefold over the past 10 years. Not only that, gross margins, which is this line, blue line, oh, I like this, has increased over the past 10 years. So you've got revenue increasing, gross margins increasing. So if you've got margins increasing, revenue increasing, that means income or profit has increased at a greater rate than revenue, and it has. In fact, if you look at the CAGR, revenue has grown at 18.5% since 2014. Income or profit has increased 36.5% per year over the past 10 years. This is the definition of a high quality company. And you can just confirm that by looking at the chart. This is the chart for Adobe, not the daily chart. You have to look at the longer term chart. And of course, I'm going to have to, where is it? Here it is, auto fit. So in fact, let's have a look at the monthly charts. You can, it should be pretty noticeable on the monthly chart. So even though the share price has been quite volatile the last 3 years, just because of the interest rate cycle, and at some points this company has been overvalued. But if you look at the period between 2014 and 2024, the share price has increased significantly during that time period, as it should, because this company has grown significantly over that period of time. So this is a high quality company with significant potential of growth in the future. Their addressable market, total addressable market, is huge, and they haven't addressed much of that. Anyway, I don't want to be too much of a bull in regards to Adobe. The other thing I should mention with Adobe, and the one thing I really dislike about the American markets, is how fickle American market or investors seem to be. So fickle. So I have seen a company share price drop 20% because they barely missed targets. When I say barely, I'm meaning 0.3% missing targets, share price down 20%. And then the next quarter, share price up 20%. Because they barely beat targets or the estimate or whatever you want to call it. So Adobe, in the March results, share price dropped 14%. The results disappointed the market. And now The share price, last time I looked, let's have a look. Adobe. What's the best way to look at this? Adobe. So Yahoo Finance is pretty good. They have the aftermarkets. There it is. So Adobe in the after hours is up 14.8%. So it might open around about $530. So we're talking about, yeah, back up to the levels it was before the last quarter results. So I found this a lot with American companies, and it seems really fickle. They are way more fickle than Australian investors because if you just slightly beat or miss estimates or guidance, your share price will be hammered either way. And that's why I think it's probably better to own these sort of companies for the longer term to smooth out that fickleness. So Adobe share price was in a downtrend because of those results last March. And I think now the sentiment in this company is going to automatically shift from negative to positive. So maybe that's the way you can play it. I don't know. I haven't really figured out the American markets. I think it's harder than the Australian markets just because of how fickle they are. Anyway, that's Adobe. Good result from the company. And I'm fairly bullish on the company moving forward. Coming in at number 4, we have Vita Life Sciences. So this was not an announcement today. This was an announcement released, I think it was like 7:10 p.m., 7:10 p.m. or something like that. So let's go back to yesterday. Only 54 events released today, market-sensitive events. So here's Vita Life Sciences at 7:14 p.m. They released some guidance. And I thought this was a pretty good announcement. Vita, this is why it came in number 4, because I thought the share price would rally. It did slightly. I thought it might be up a little bit more than that, to be honest with you. So sales are nice. So sales a nice increase from last year, up to 39 to 40 million. Pre-tax profit, flat. So possibly that is one of the reasons why the share price hasn't gone on a little bit of a run today, because even though the sales or revenue have increased, seems like the margins have decreased. So profit is flat from last year, but they were fairly bullish. I think this is what I remember reading this last night. It seems like they were fairly bullish in their commentary. For instance, they remain confident in maintaining revenue growth across its core markets. First half performance has been buoyed by robust sales, reflecting the strength of the group's diverse product portfolio and effective channel strategies. Group operations continue to track against expectations. Looking ahead, there will be continued focus on investment in trade and brand advertising aligned with evolving channel dynamics. Management remains positive in delivering ongoing shareholder value and returns. So it sounds pretty positive, and I just think it might be the decrease in margins because those profits haven't increased as much as revenue. So let's have a look at the chart for Vita Life Sciences. And the chart has looked good, did pop up to my radar a few months ago. You might say maybe it's illiquidly traded. You can sort of see that just by looking at this, but this is a daily chart. You might just want to expand out to the daily or the weekly chart. So the share price has gone on a nice run since 2020. In fact, the share price has quadrupled since then. But you can see the share price isn't as high as it was back in, it says 2001. I don't think there was a company, because there's a massive gap between 2002 and 2007. So anything, in fact, I'm just going to go right here. So that's probably Vita Life Sciences chart right there. And it actually looks pretty good. So a dip, and now the share price is recovering again. I just like to see a bit of an increase in volume. And the market cap of this company is $135 million. So what you could also do is just go look at this. I look at these sort of things fairly quickly. VLS, just look at revenue growth. And we have a nice increase in revenue over the last few years, 5 years or so. I would say margins maybe have dropped. Probably won't see margins yet because the results haven't been released. Where's the margins there? Gross margins. Gross margins have been dropping. So that's one of the concerns I would have. We do see a drop in gross margins. I'd like to see gross margins at least not dropping. And because we see gross margins dropping and revenue rising, there is a chance that profit hasn't increased all that much, if at all. So let's have a look at profit. Yeah, so profit has been increasing slightly over the last few years, but maybe not as much as it could because of the decrease in gross margins. If I see a nice increase in gross margins or gross margins starting to flatten out, that could be a good sign moving forward for Vita Life Sciences. So that company comes in number 4 because of their sort of trading update they released on the 13th of June. Coming in number 3, we have Deterra. Share price down a fair bit on an acquisition. It's really interesting because I heard someone talk about this company many months ago, saying it's one of the best quality mining companies because they just take royalties from like BHP. And they're also saying it was the easiest company to manage because they don't have to do much. They just get royalties from their investments in these mining companies, whatever they call it. And the person also said, I forget who it was, the person also said he was a little bit wary because he thought the worst thing the management could do was an acquisition. All they have to do is just sit on the backsides and just take these royalties year after year, and they will be successful in the long run. And they just were concerned that the company the management would get a little bit too ambitious and make some acquisitions. And then last night, so last night they announced they were acquiring a royalty company called Trident. I believe it's listed on the UK exchange. I could be mistaken. And yeah, so the market hasn't liked it, down 6.95% for the day. But the other thing I noticed about Deterra is there's a fair bit of negative sentiment in this company right now. And you can see that just by looking at the daily chart. Share price started to take a tumble just before this announcement. It had moved into a short-term downtrend, and I'd say the sentiment had shifted to probably negative. And the other thing to notice, when you look at the weekly chart, share price has done absolutely nothing. But I'd say the returns have been fairly good because I would imagine this company has a pretty nice dividend yield. So let's have a look at the dividend yield. Yeah, 7.12%, P/E ratio 14.1. So I think this is just a pure income play. If you like the dividend yield, this would be probably a pretty good investment. And maybe now could be a good time to take a position because share price today got down to 390. Now, in fact, I'm going to put a little triangle down here. This is a really good, nice buying zone. And the share price got into that zone today, but has pulled higher. So that's below $4. So today could have been a good day to buy some Deterra Royalties just based off this chart. And that zone looks really good below $4. So it's not that far above at $4.15. So that's coming in number 3. We have Deterra making an acquisition. So I do know some people might not be happy with that because they believe that that sort of capital allocation decision is maybe not right for this company. So that remains to be seen. Maybe it will improve the income moving forward for Deterra. Coming in at number 2, we have Telix Pharmaceuticals. I wonder if this company's share price went up or down today. Went up. Okay. I was not sure how the market would react to this news. So Telix was going to list on the Nasdaq, I think, and they withdrew from the proposed US listing today. And I thought, oh, maybe the market wouldn't react to this. But I do like why they've done this. Their explanations behind why they've decided to withdraw, I just think, yes, absolutely. So the CEO of Christian Berenbrock, in fact, he's one of the only people on Links. What's it called? What's that thing called? The employment thingy called LinkedIn or whatever it's called. He's one of the only CEOs I actually do follow, Christian Berenbrock. While this is not our desired outcome, Telix's strategic objectives must align with our duty to existing shareholders. I'd like to thank my team. That's not what I wanted to say. There was something else here. That the company did not feel that the proposed discounts were aligned with its duty to existing shareholders. Given the proposed Nasdaq listing was not predicated on the need to raise capital, Telix management and board of directors have decided not to move forward with the transaction at the terms provided under current market conditions. So the few reasons they gave here, the performance and prospects of the company remain strong. As a profitable, cash-generative company, Telix retains sufficient earnings and balance sheet capacity to deliver on its key corporate objectives. And I actually do agree with that. There was no need for this company to list on the Nasdaq. One of the reasons company lists on equity markets is to gain access to capital. It's a much better way to gain access to capital, and they don't need more money. So there's actually no need to list on the Nasdaq. Some people believe that maybe Australians underappreciate this company. I don't think the American Australian market is underappreciating Telix Pharmaceuticals at all. This company now has a market cap of $5 billion. I believe it's about $5 billion. Maybe it's $6 billion now. I haven't looked for a while. $5.55 billion. And this company's barely has just become profitable. For those who have never taken a look at this company, I'm just going to show you something extraordinary. Telix Pharmaceuticals. I'm going to show you the half. I'm not going to show you the yearly. I'm going to show you the half yearly increase in revenue. Here we go. Half yearly increase in revenue. See, here it is. This is half yearly numbers. It's gone from $4.7 million 2 years ago to $281.7 million. And this is going to be upwards of 350 million this particular half year. Soon in a whole year, they're going to have close to $1 billion in revenue. So it's gone from almost nothing to $1 billion in a few years. So extraordinary growth in revenue, 75.31% compound annual growth in revenue. Total change, 1,561% in 5 years. And in fact, most of that, there was no growth at all. In fact, if you just go in a little bit, we go to when it started increasing. There it is. Yeah, so, well, still 5 years up there. I want it to be not 5 years. Here we go. Compound annual growth, 600, and that compound annual growth was going back 5 years. So if we just zoom into when it started growing, 675% per annum growth in revenue, 5,911.8% over the last 5 half years. A phenomenal growth. This is why the market is where it is, because of this sort of growth. This is the sort of company I am looking for every single day when I am researching companies, this sort of extraordinary growth in revenue. And this is one of the reasons I do own shares in Telix Pharmaceuticals. In fact, the whole reason I bought shares in this company is because I saw that growth in that first half year. I went, whoa, that is what I'm looking for. So coming in number 2 is Telix Pharmaceuticals. Will not be listing on the Nasdaq, and I am actually absolutely fine with that. Seems like the market is as well. Coming in number 1, and to be honest with you, I ranked these just randomly because there was no extraordinary announcement out of all these. But Titomic, a company I've been following recently because they've just interested me. They released an announcement. Titomic advances significant global defense sector engagements. Keeps seeming like this company keeps releasing interesting announcements after interesting announcements. These engagements represent 476,000 in revenue for Titomic. What's the best way to call Titomic? Yeah, I can't give an elevated pitch in regards to this company just yet. So, integrated solutions for industrial scale metal additive manufacturing using its patented cold spray additive manufacturing cold spray AM technology. I'm still wrapping my head exactly what they do, but the more I read about what this company does, the more excited I get. And it seems like that's what's happening with the market. So it's just another really good announcement from Titomic. I'm a little bit surprised the market didn't react as well as it did, but the share price has gone on a massive run the last few months. So this is the weekly chart. So look at the weekly chart. Doesn't get exciting, but look at the volume. Look how the volume is expanding for the last 8 months, 9 months, in fact, since July last year. We start to see the volume starting to increase. Now, there is a belief, the volume a lot of times precedes share price action. This is exactly what happened to Titomic. Look at the volume increasing July, August last year. The share price didn't start increasing until December. So about a 4 to 5 month lag between volume increasing and share price increasing. It's extraordinary. I want to do more research on this because I've seen this written down a few times. And then this is the daily chart. And this is a wonderful looking chart. This is exactly what I want to see. Beautiful run, pullback, beautiful run, pullback, beautiful run, another pullback. And I have not taken position in this company. I'm just going, why haven't I? We have the pullback. We have had the pullback. Now, take a position because we have seen that happen now 3 times. Company's market has a market cap of $80.8 million. And probably the other thing I'm wary about, the company hasn't quite proved themselves just yet. And what do I mean by that? Let's have a look. So, yeah, another announcement they just released recently. Woodside Energy to use Titomic 5D523 system. Titomic system sold to Triton Systems. So let's have a look at the most recent Appendix 4C. So actually, this is not as bad. I'm thinking, might be thinking of another company here, but Recessive customers 2.2 million. So it's higher, but they did receive $1.6 million in government grants and tax incentives. So if you take that away, they were operating cash flow negative by over $2 million. So I just want to see how they do perform or have performed in this particular quarter. But things are moving in the right direction for Titomic, which is the company of the day and the announcement of the day. Even though we haven't seen a significant reaction from the market, share price still up 5%, which is okay. Yeah, I'm hoping the share price could drop towards 7.5 cents. I might take a position in the company if it does that. All right, so let's have a look at some charts. I do have 8 or even 9 companies I want to have a look at. So let's go through this fairly quickly. So BetMakers, did I have a look at BetMakers early? I have a feeling I did look at BetMakers. I have a feeling I looked at BetMakers already. So we can skip BetMakers and have a look at Demerix. And if I didn't have a look at BetMakers, there it is. So Demerix up another 8% or 11.2% today, sorry. And this is the definition of a beautiful chart. I am getting a little bit, not nervous, that's not the right word, but when I see the share price do this, go exponentially higher, I do get a little bit wary because typically you won't see the share price zoom higher like this. It's not every single day. In fact, it goes up one day, goes down the next day, goes up, down, up, down, up. So it seems like it goes up every 1 or 2 days, and then every 1 or 2 days it goes down. Does that make sense? It goes up, goes down every 1 or 2 days, which might be okay. And the other thing I'd like to see is a higher volume coming in, which would make me a little bit more confident. But I am trading this right now, and I do have a longer term position, but this is the definition of beautiful chart. And the breakout for this company happened on the 5th of October. So study Demerix chart and just study the breakout and look at this pattern. You could have bought Demerix for like 2 months after breakout because the share price didn't really start going higher for 2 months. I see that a lot. But the most important thing here with Demerix is the share price just went sideways. We didn't see the share price get lower than the close or the open of that day. This straight line signifies that. Didn't get lower than that dashed line. So that's Demerix. Another good day for that company. Zip is zipping higher. What's happening with Zip? Let's have a look at the chart for this company. So a good 2 weeks for Zip. It's gone from about $1.05 to $1.45. Okay volume, not as good we saw back when the share price was in that bull run. I'm going to have a look at a firm. Is a firm doing or going nuts as well? Not really. Although firm might have released something recently. Share price did go on a rally on the 11th of June, up 11%. So maybe they released results on that day. Yeah, so Zip is zipping higher. RTH, RAS Technology, Race and Sport Technology. Share price of this company was in a beautiful uptrend, and it's pulled back. Is this a buy the dip situation? I don't know. This company was on one of my watch lists. Yes, it's still on our watch list, but I wasn't really keen to take a position. But now I might be a little bit more keen because of the dip in the share price. But the dip has it has dipped a fair bit. It's fallen 38 divided by $1.44. It's fallen. I can't do that sort of mathematics in my head. Fallen 38 cents, $1.44. We'll say about 30%. I'm going to do 30%. 38 divided by 144. 26%. There you go. Not that far off it. Yeah. So it's fallen 26%. Actually, that's not a lot in hindsight. So this could be a support area for Demerix. It could be, not necessarily so. Not Demerix. RAS Technology. And I don't follow this company too closely apart from the chart. RAS Technology, SXG, Southern Cross Gold. Share price dropped a little bit today. Oh, yes. So this chart is starting to look a lot weaker. A beautiful looking chart. Now looking a little bit weak. 2 big down days in a row for Southern Cross. Life 360 had a good day. This is fairly similar than Telix Pharmaceuticals. This company is listing on the Nasdaq. The market didn't like it, but the share price has rebounded. This was a buy the dip situation for Life 360. Share price fell to $13.50. Now it's back up to $15.07. And I am trading this company. And Botanix, a company I'm not trading. I have no idea what this company does, but this chart looks pretty good, doesn't it? So this is a case of, I have no idea what the company does, but the chart looks really good. In fact, the chart for this company has looked really good since the start of 2023. You could have bought this company on the breakout at about 7 cents. Share price is now 33, so it's gone up about fivefold. And the markup of this company is almost $500 million. No idea what this company does. I don't care right now, just by looking at this chart. The market loves this company. And finally, actually no, 2 to go, Clio Diagnostics. So the company released something on the 29th of May. I mentioned this company then. Share price went sideways the next 3 trading days. That was a good sign moving forward. And this is a developing beautiful chart. Clio Diagnostics. Share price has increased by about 24.15, about 75% from 24 cents, which is the share price you could have bought after the breakout on the 29th of May. And finally, Wagner's. So I did a video on Wagner's quite a few months ago, and I said that the share price fell to around 80 cents or so. I might take a position in the company. And it's done it twice now, and I wasn't really paying much attention, although the chart does look negative, doesn't it? So share price fell about 5% yesterday. It rose 10% today. It's been quite volatile the last few weeks, though. So a fair bit of volatility in there. So Wagner's did a video on this company, and I said I'd buy shares, or might buy shares, if the share price gets to 80 cents. And it's now got to 80 cents, and I have not bought shares. Now, the only company I did buy shares recently is Mitchell Services. We had a bit of a dip, and I'm hoping this is a buy the dip situation. And I'm hoping, and this is research, some more research I've looked at is technical analysis is even more powerful if you take value into consideration. And Mitchell Services, I think, looks really cheap. And not only does the chart starting to look good, a little bit of volatility in there, we are starting to see increasing volume. You can see that in the weekly chart. So since February, we have seen a marked increase in volume. So I'm hoping, and the weekly chart looks really good too, starting to break out on the weekly chart. So I'm hoping this is sort of the breakout of a company, and the uptrend will last for a while, because if you look at the financials of this company, so it has a dividend yield is 11.2%. I'm not sure if that's absolutely accurate. P/E ratio of 7.6. But it is a mining company, a drilling company, and I don't think that's the highest quality company, but even so, you still can find value in those sort of companies. Anyway, that's all I've got for today's video. It's been going on for nearly an hour. If you have any thoughts, any questions, just leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.